we had a recent question, which is, where is it better to take a loan from? Do I borrow directly from my policy, or should I take a loan from another source, HELOC? Maybe it's a 0% interest car loan. Maybe it's a mortgage. Whatever it might be, maybe it's a cash value life insurance loan that I'm collateralizing. Whatever it might be, what I want to do, instead of saying one option is better than the other, because that's not the case, is weigh out the pros and cons. So a major advantage to a policy loan is you have control. When I borrow from the cash value of my life insurance policy, it collateralizes my death benefit. I still continue to earn appreciation on my entire asset. So if I have $100,000, let's say the dividend rate for simplicity is 6%. I pull out $50,000. I'm going to have annual simple interest of 5 to 6%. That goes where? That goes to the insurance company. Now, even though I'm paying the insurance company, we can call them the lender for this example, I'm still receiving the same appreciation, the same 6% dividend on the full 100 as if I never touched it in the first place. So when I borrow and repay, everything's fully restored to what it would have been otherwise. Now, down here in this word of control, why a lot of people are attracted to using their cash value life insurance policies is when it comes to any kind of payments, the control is in the policyholder's hands. I don't get monthly interest statements that I have to pay it back by a certain point in time. Literally, I can pay it back however and whenever I want, provided the policy is not in danger of lapsing or anything like that, but I have control. That's the attractive feature. Now on that point, if I'm going to earn a 6% dividend, whether I just let the money sit and grow or pull it out, the question comes up is, hey, if I just put my money in the cash value of the policy and I have the 6% dividend and I can borrow at, call it 5%, or I can obtain a loan over here at 3%, maybe it's 2%, or say it's a 0% loan interest car loan or something like that. Should I take the loan from the institution, or should I finance it through the policy? Well, you can go either way. Using the policy gives you control. You can pay it back however you want. If life happens, you don't have any kind of billing notices come, doesn't impact your credit, nothing like that. That's an attractive feature. Over here, I can get a much more attractive interest rate. Here's the thing though, if I go to another institution, what am I going to give up? A level of control, where payments are going to be required, often monthly. If it's a HELOC, what can happen here? They can call it, right? So if the loan is called, I have to pay that back. Again, I'm giving up control. Better interest rate, and yes, you could just borrow from your cash value to satisfy the call, so you kind of leverage both, but I'm giving up a bit of control here. Cash value collateral loans, we've got a couple segments on those, which I'd refer you to if you have not seen yet. This is literally taking my life insurance policy and assigning a portion of the cash value as collateral to a lender to get a more attractive interest rate. A lot like a line of credit. What it gives up is control or access of the cash value. I can still access my cash when I use this. Maybe I'll have a better interest rate. Let's say it's 3 or 3.5%. But if I want to make any type of transactions with my policy, there's now a collateral assignment on that life insurance policy. So if I want to borrow, if I want to change beneficiaries, do anything, the bank has to sign off on it. So control is out of my hands in that respect. Big thing here is control. I also have payments that are going to be due typically monthly to the lender, the lending source. Really, it depends on the individual. There are a lot of times one prefers a policy loan because you don't have to worry about anything. You pay it back however you want, and the interest earned a lot of times will offset that loan interest expense. But if we're looking at the interest expense and we have no problem, if we're used to leveraging, maybe it's real estate or whatever it might be, if we're used to borrowing, yeah, take the better interest rate. If we're comfortable with those payments, there's nothing wrong with that. Weigh it out. See the pros and cons of whatever specific lending or loan product I'm looking at, and then compare it. Here's the pros and cons, and then here's the pros and cons to borrowing directly from a life insurance policy.